Investors and traders, welcome to the channel Market Chart Pattern. Today is 22nd of April 2024. Hope everyone is having a great day. We will be reviewing the key US markets. We'll start by taking a look at the bond markets. We'll also take a look at the long bond futures, and then we'll take a look at US dollar index and the gold market, and then we'll move on and take a deeper look at the key US stock indices that we follow. And time permitting, we'll also take a look at Apple stock and the Tesla stock, and Netflix. We'll see how long the video goes. So I'll try to make it short though. As always, this video is for educational purposes only. It is not a financial advice. So let's start by taking a look at the shorter end of the curve. So this is the US Treasury 2-year chart for the 2-year Treasury note. And here one of the key things that we had been watching for had been this 5% on the yield. So the y-axis is on the yield, and we can see that today there was a little bit of a pullback, but nothing great. But this line keeps on proving to be a resistance level so far, but you can see the momentum is strong, but maybe this is the level that the market is watching. If it begins to move over 5%, then it will make a news, because that's pretty significant. So this is the shorter term. On the longer term, let's take a look at the long bond futures chart. This is a daily chart. Here we have this is price based. So what we see on the right hand side is the price axis. The way it works with the bonds is the price and the yields are inversely related. So if the price is moving up, yields are moving lower. So we have been watching this key pattern formation for quite some time now. So last week we began to take a look at this pattern. This pattern is still holding. We had a nice rally, but it just went to 38.2%, and that's where the sellers came in. And today has been the start of the week. We saw the yields go down for the longer term as well, so that's good, because it means there is the chances for the interest rates going up is less. So, and also this being the longer term duration is really important as well. But it really needs to get above the 116.04 level, which is 38.2% retracement, to target 117.24 and possibly even higher. And then we'll begin to get more confirmation and begins to take these swing highs out, that we might in fact be moving in this CD leg higher, which could see the yields come down significantly lower, and which means that this low, which came in October of 2023, was a very important low, and then a secondary low which comes in this year in April was another really important low. But again, we could rally nicely for several months, but still remain in a bear market, and it's been a bear market since 2020 in the bond futures, or bonds in journals, treasury bonds. Okay, so with that, now we'll take a look at the dollar index. This is the daily chart of the dollar index. This is the key level that we had been watching, 106.40 level. So when we did the video over the weekend, we were looking at this level and the possibility that this possibly might be a high in the US dollar for this segment. So there is this 1-to-1 price projection ABCD, which actually takes it to up to 106.75 level, which is where we initially thought the market might be going, because just to challenge these highs here, which was a double top formation. But what I have also shown you is this gap formation here. You see these two red lines. The market actually went and touched this, so it's still possible it might actually go and go somewhere in the middle or even touch the upper line, but the chances are we will find actually pretty strong resistance in this level, and we might not actually go and challenge these highs one more time. That possibility still remains. So 107 that we're looking for might not take place. So anywhere between where the market went 106.30 to 107 is possibly where we are going to find pretty strong resistance. And what we are seeing is just market consolidating, and of course if the market is really strong, it takes these highs out, these tops out, and then the US dollar is off the charts. And but for now it looks like there is a weakness coming in the US dollar. And we also have this trend line here. So this I can draw this with here, so you can have a wedge formation as well. So we have resistance here at this level from coming from this wedge top as well. Now the key thing will be, you see this bottom of this channel here, this trend line. If the market is able to move back lower, this structural high, which could prove to be support, is taken out, and then we begin to take a move lower from this trend line, that would be a pretty good indication that we might have seen, in fact we might be moving in a one-to-one price projection ABCD. We could actually see these lows, or you can even think of it as a range. So the bottom of this range getting challenged one more time. And the key thing for the US dollar is that on the weekly chart, this 99 level, that is such an important level, that it really needs to break this convincingly for the dollar to move down significantly. And what we might be actually looking at for now might be just a test of the range. So this is the upper boundary, and the market might actually get weaker, and we begin to come and test the bottom of this range right here as well. So now the interesting thing is with the gold. So this is the gold market, and what we have just seen is essentially some weakness which is coming in the US dollar. So the US dollar was not very strong today as we saw the chart, but the gold has been pretty weak today. Normally at gold, when priced in US dollar, should there be in a inverse relation, and we have seen gold move pretty strongly when the dollar has been pretty strong as well. This is something which we had been discussing, and today the US dollar was mixed, but there's fair amount of weakness which came in the gold market. So we are looking at the COMEX gold. This is not the spot gold. So what we were watching for on the weekly chart was this is what we looked at over the weekend report. We saw an inside bar formation for the week which started 15th of April. So that was the last week. And now what we're looking at is, if we begin to close below this last week's low, then chances increase that the market could actually pull back to about 38.2% retracement of this swing low to high. And we also have the market symmetry, which also points nearby. So that's fairly common kind of retracement. So about 2210 might be on the cards, and if we just take this low to high, then we have the 50% coming in this range. So we'll have a confluence of two things coming together, and the third one being the market symmetry. So we'll have a confluence of two and more things coming together. Is always something which pay really close attention to. Now it's possible, if we are starting a correction in the gold market, that correction might take form of an ABCD formation as well, and we'll have to wait and see. But for now, what we have seen is a pretty strong move to the downside in the gold market, and all it has done so far is it is reaching the 38.2% retracement of this swing low, which was from 14th of February to the highs of 12th of April 2024, and where we also have the 20-day moving average as well. So there is support available around here. So we'll have to wait and see how the market is going to behave when it reaches the 20-day moving average. Once on the daily chart, the markets begins to close below the 20-day moving average. That's when from a shorter term momentum perspective, the shorter term traders most likely will be looking to short the market because the momentum is turning negative. So 20 days, I like to use the 20-day moving average as sort of a gauge for shorter term momentum as well. So this is what we are watching. Possible support coming in from the bottom of this channel, 38.2% retracement around 2,333, a little bit below that 2,325 is the 20-day moving average, and we'll wait and see whether that is going to provide some good support or not. Downside targets, we have already discussed that. Below 2333 is 2300 psychological level, and also the bottom of this where the breakout actually started from, so that could actually get tested, and we'll have further support levels down below. But for now, just look at this. Key thing is the US dollar. If the US dollar is getting weaker and the gold market is also getting weaker, then this is direct market feedback which is telling us something. So we'll have to wait and watch and see what happens. With that, now we will begin to take a look at yeah, let's also quickly take a look at the Euro USD. Yeah, we can see that it is also, yeah, as the US dollar pulls back, it will actually impact the Euro USD. There's a possibility of this bigger ABCD. That's the 107 level that we were discussing. So the chances of that, in my opinion, are diminishing. So we'll just wait and see and watch. Okay, and now let's take a look at the key US stock indices. So we'll start with the European market. So we'll start with FTSE 100, and we can see that FTSE 100 has been pretty strong today, and even last week it had closed strongly above the 38.2% retracement. So that was a pretty strong signal that we were watching how the other markets are performing. There is certainly weakness last week, especially in the US market, but the European market, the international markets, we have to also take a look at how they are behaving to these, if there are just geopolitical events which are impacting those. Now, what I would also like to show you is the Japanese market. So this is the Nikkei. And the really interesting thing is that Nikkei also made a 38.2% retracement right from the bottom in October 2023 to the highs of 21st of March 2024. And again, it seems to be finding support around here. Today's price action was a bullish candle close, and if there is a follow through to the upside, then this could potentially be a pretty important bottom possibly. So we'll wait and see for the confirmation. Similarly, let's take a look at the German DAX. Another key European market, a similar kind of picture. We were discussing the 38.2% retracement from the lows right here to here, and the market did not have any follow through to the downside. In fact, the market closed positively and took the highs of last Friday out as well. So that's good from a bullish perspective. So if there is a follow through tomorrow, and particularly if we begin to close above the 20-day moving average, that means further positive momentum is building, and that's going to be good for the bulls. Now, one thing I would like to point out is by looking at these international markets and the European markets, one of the things we can kind of compare between the US market and these international, especially the European markets, is if the US market still begins to show weakness, then it is an indication, in my opinion, that it's just not the geopolitical events which might be impacting. It could be something a little bit more fundamental as well. Maybe there is some sort of a rotation happening as well, where certain indices such as the NASDAQ, which is growth related indices, maybe investors are selling some of those stocks because they are more sensitive to the interest rates, and they're moving into other kind of stocks, with some value stocks, dividend paying stocks, high quality stocks as well. And that's why one of the reasons is that when we look at Dow Jones, so this is Dow Jones Industrial, last Friday when the S&P 500 and NASDAQ closed negative for the day, the Dow Jones was performing pretty well. And if we begin to look a little bit inside of Dow Jones, because this is a price weighted index, so all those stocks which are highly priced, they have a fair amount of impact on this. So I believe there is let's take a look at the JP Morgan, some of the financial stocks. So you can see that last Friday JP Morgan was doing pretty well. It's about $189 $200 stock. Then especially the Goldman Sachs, which is about, yeah, there we go, $400 stock. And last Friday, when the S&P 500 and NASDAQ, they were having a pretty strong downdrafts, and Goldman Sachs was doing nothing. And we have got earnings coming out in Goldman. When are the earnings coming out? Actually, Goldman had already its earnings come out. So yeah, they were positive. That's why we are seeing strong momentum in Goldman Sachs. So that is impacting Dow Jones. Companies like Caterpillar, sure, there is some pullback, but nothing that significant, whereas NASDAQ has had a pretty strong pullback. So this is why I wanted to point this out as well, to also watch some of the international equity indices as well, because after all, it's just a big cash flow chart of flow chart of cash, which moves from one place and goes to different other assets and asset classes. Okay, so now let's take a look at the cash S&P 500. This is the daily chart. Um, what we were discussing last week in the weekly video was the possibility of the 19th of April being a possibly an important low, perhaps, with the possibility of that, and we need some further confirmation. At one point, the index did close positive, so which is good. It was pretty strong, so I did not like that. In the last hour, we began to give up some of the gains. Had there been a much stronger close, that would have been much better, the kind of close which we saw back in October 2023. So we'll have to wait for further confirmation, but looks like we had the confluence of this 23.6% retracement and 50% from this low. That could be a a pretty strong support level, so we'll have to wait and watch and see. Now, okay, we'll discuss this one more in the weekly video, because there are two possibilities I see, whether we are still either we are ending a correction or we are still in a correction. And if we are still in a correction, then we can actually see just a retracement for this, or it could be just a bounce and we could have an ABCD formation. Or if it is an end of a correction, then the chances are that these highs get challenged or possibly even taken out um, as well. Personally, okay, so we'll discuss this more about this scenario possibility in the weekend video. Okay, NASDAQ 100. This one was the weakest one last Friday, and here it was also approaching a key level as well, because it was approaching the 61.8% retracement, and just below that is the 38.2% retracement from the lows of 2023 of October 2023, and it closed positive today, which is good, but it's also an inside bar, so we would like to see further follow through. Now, we've already seen the Dow Jones Industrial. We'll just take a look at the Russell 2000. So Russell 2000, in fact, had a good close, a positive close, and last Friday it was also one of the indices which are closed positive for the day after forming this big tail level, and which we discussed as possibly a double bottom formation. So nice follow through, and if we begin to close above these swing highs, that's going to build positive momentum. And finally, if you're able to get above the 20-day moving average, that's going to be something really positive for this one. Okay, so now let's take a look at Apple stock. Here we go. So the Apple stock has been pretty weak, and when we did the video where we like to take a look at the key tech stocks, we were really impressed with this move on the 11th of April. But one of the things was that for the further continuation, we were watching for $180 level, because that's where the 38.2% retracement is, to be exact. It's about $177 per share. So we did not get that, and what we saw is actually this low being taken out. And so what the Apple has done is, and it has done this in the past as well, it likes to do double bottoms. And what it is doing is, if you think of this as a trading range, it's gone and tested the bottom of the trading range, but it still needs to build some positive momentum and begins to have strong bullish closes on the daily chart. Otherwise, the chances are maybe it could move a little bit lower as well. But $165 per share level is a pretty interesting level. Below 163, in my opinion, will be a little bit dicey for this one, which means that it could actually, in fact, pull back as to about $155 as well. So 165 is something as important level that I'm watching. Below that, 163, 155 level opens up, in my opinion. So we'll have to wait and watch to see. And if it is able to get above and close, begin to close on consecutive basis above 170, which is 20-day moving average, that will build a positive momentum as well. Okay, so the other one is Tesla. So the Tesla stock has been pretty disappointing. We have tried to take a look at it from a bullish perspective. There have been several ABCD levels. There has been this channel formation as well as broken below that. It also broke below the 78.6% retracement as well. Excuse me. Now, this opens up a possibility that Tesla will in fact be in this one-to-one price projection, which could in fact see the stock move as low as $115 per share level, which is really close to the bottom round here of 105 level. So yeah, it remains challenging unless we begin to see positive momentum coming in this one, and we do not get any follow through selling, especially today's low is not taken out on the closing basis. Then it would begin to, in my opinion, form some positive narrative for it. Otherwise, the possibility to $115 remains on the card, in my opinion. So this is what we are taking a look at in different stock indices and some key stocks. Apologies, the video has been pretty long. I'm still trying to sort out the issues with my software for video recording, and I hope that this one will be much clearer as well. But once I move to the new software, then I hope that it should solve our problems. Thank you very much for watching. Good luck, good trading. Speak soon.